Hey everyone, so in this section we are going to map 15-minute structure. We're going to do a little stretch that is bullish and a little stretch that is bearish. So we'll start here on April, 21st? And we'll probably carry on till somewhere in July. And I think that by that point everyone will have a good idea of how it is we use this market structure to help us get on the right side of things. The next video will go in a little bit more detail of how exactly you can use the time frames together. So if we're just looking at this here, this would be our lowest point here. And ultimately, when this low gets taken, we have new 15-minute structure. So now what we can say is this is the absolute highest point here, and we have a bearish push to all the way down here. Now we do have a little bit of a pullback. With the 15-minute, you're going to want that 10-15 pip pullback. In a messy area like this, if I don't need any extra structure, I won't map any extra structure. Let's see what this is. So this is right around that 12.5 pip range. We can class that as structure. If you didn't want to and you wanted to classify this as one bearish push down, that's totally fine. If you choose to lean closer to the 15 pip, that's fine. If you choose to lean closer to the 10 pip, that's totally fine. Myself, what I'll do is I will lean whichever way I have to and give myself extra structure where I need it, and I'll stop myself from having extra structure where I don't need it. And you'll see with the 15-minute, you can get into some pretty messy areas. And ultimately what happens is you get way more structure than you want. So this is actually a prime example here. So we have another break here. So if we just quickly look at this here. So we do have a candle break here with a candle body. So this would technically be structure as this body broke this low. Now again, if you're not sure, just measure the pullback and see how big it is. In this case, the pullback is only 8.5 pips. So we will not class this wick as structure. We are going to go right down to the bottom and class that as structure. Now we have a momentum change here, as well as a change of character, and we'll talk about the change of character in a different video, but it basically means it's our first signs of a trend change. So here, once this high goes, we're going to be looking for our first bit of structure. Depending on how long this doji is, you may choose to classify this as structure, you may not. 8.5 pips, so that's not enough to be classified as a pullback. So we will go right from the lowest point, which is down here, all the way to the highest point, and we'll class that as structure. Now obviously here we definitely have enough of a pullback. That is the lowest point. Once again, we take the high here and the bullish momentum continues. We don't really have any significant pullback here, so the push continues right on through. We do end up becoming unconfirmed bearish here for a short little while, and just to become bullish again, just to become bearish again. And with 15, this is very common, and this is where we will use changes of character and higher time frame market structure to stop the confusion. So once again, we have the high, we have a low here. Now if you wanted to move this dot over to this section, because these are higher points than the points over here, you totally can. Once again, we break structure here. And with 15, like I said, it's totally normal to have a messy little bit of structure. Now this first little area here is probably not enough of a pullback to be classified as structure. So we'll just go ahead and map this section as structure. And ultimately here we just became bullish again, just in time to become bearish again. Now this may seem confusing to you at this point. When we connect all the dots together and talk about the why, it'll make a little more sense. It's not as bad as it looks. And ultimately you're always trading in the direction of the 4-hour time frame, which is pro 4-hour time frame. And if you're trading the pullback, you're always anticipating that the pullback is going to be a shorter trade. And as long as you can keep thinking like that, it shouldn't be any issues to know when to stop trading. So for example, just looking at the little bit of structure we mapped, you can anticipate that the pushes up are going to be longer, the pullbacks back are going to be shorter, pushes up are going to be longer, the pullbacks are going to be shorter. So anytime we are counter 4-hour trend, you can expect the pullback to be quite a bit shorter, and we'll manage a little more aggressively, meaning that we'll be looking to take profits at the first demand and supply zones rather than running the weak highs and lows. And if you don't know what any of that stuff is, don't worry about that. We'll be talking about that later on in the content coming up. So here we once again become bullish. Now, depending how big this pullback is, I don't think it's quite enough, which it's not. This pullback here is still not enough, so we're probably going to go all the way up here, as that's the first any real decent pullback. So you're 12.5 pips, that's borderline. I'll class that as structure, no problem. And what we're looking at here is a continued bullish trend. Now anytime we're in line with the higher time frame trend, you're always going to be looking to run the highs. So in this particular case, once this first high goes and you do find something in here on the lower time frame as an entry, you'd be looking to run these highs because we're expecting the bullish trend to continue. So your near term target would be to run that at a bare minimum. So down here we do wick below this wick here, but as everyone can see, we don't actually candle body close below the wick, so this is totally acceptable. No new structure is created. And we obviously have new bullish structure as we take this high here. Now, once again, our impulse doesn't end till up here. We have a bit of a pullback here. We're going to call this pullback our retracement. So you can see how much longer the bullish trend goes compared to the bearish trend anytime the higher time frame is bullish. And ultimately this is going to help you be on the right side of the market more often than not. And it won't always work out for you, but that's what trade management is for, to keep your losses minimal so you break even instead of taking all the extra losses. So here we are the top of 4-hour structure. Ultimately we get a change of character here when this last sort of demand goes that put in this high. So something in here caused that. As you can see, this supply zone gets mitigated, and ultimately you would take a trade from something in here on the lower time frame. And obviously you wouldn't be shooting for the moon here because this is counter trend, so you'd be pretty content with just being very aggressive with your management and maybe just running these lows, as we definitely know there's some kind of retracement coming, and the premium and discount array will help us with that. But just to stay on topic here, we'll say we had new structure created here. So now you become bearish here. Again, you don't have any real pullback here, I don't think, worth classing as structure. 9.6 pips. It's not amazing. I probably won't class that as structure. It's right on that borderline. If you did want to class this area as structure, you could. It's close. It's close enough to 10, but I don't think we need to in this case. We are expecting this pullback to continue. And a good rule of thumb is we expect the pullback to be roughly 50% of what the impulse was. So if the impulse was 150 pips, we can expect a retracement to be 75 pips, give or take. It's not 100%, but it kind of gives you an idea to what you can expect. In some cases it'll be more, in some cases it'll be less. But I know that if the impulse was 150 pips, that a 75 pip pullback would put us back into equilibrium where fair value is achieved. And that'll be talked about in the future videos as well. So here we become confirmed bearish just in time to turn bullish again. And ultimately we have a flip zone in here, which is basically where your supply fails in here, and you have two areas that could have been the cause. One would be this wick, the second would be the doji below. As you can see, they came back and retested the area that caused the flip. The flip is basically where the bears lost momentum, the bulls took over, and ultimately we'd be looking in these areas to take it back on up as we're trying to realign with higher time frame trend again. And don't worry, all of this will be explained. I just thought I'd go over it as I see it just to get everybody warmed up to it. So here we have new structure once again. We have a bit of a pullback in this area here. And some of you may find this video a little bit boring, and if you don't need to watch it and you think you understand market structure, you don't have to. It's going to take us a little longer to map 15 market structure as there's a lot more of it. And some of you may choose to watch this quite a bit. 15 and 4 hour is ultimately what you're looking at pairing together. Those are your two favorite time frames as a day trader. It's a big enough of a time frame that you are getting proper signals, yet it's small enough that you can use it for intraday. I'm not a huge fan of 5 minute and 1 hour. Like, you can definitely look at it, but your analysis should come from the 4 hour and the 15 minute. Now here we are at the peak of the daily and the 4 hour. So if we just take a quick look at what we mapped here, this was the little bit of a bullish section that we mapped. Here we turned bearish for a daily pullback that we talked about to gather this liquidity, tap into this daily OB just to continue on up. And ultimately, you're always just trying to determine who's in control, supply or demand. So as long as supply is in control, you're going to keep selling. Once supply loses control, you're going to start buying. And the 15 will be the first time frame to let us know who's in control. So we put in a low here. Our first bit of pullback, I would say, would be all the way up here. And ultimately, you have another low created here. Now the impulse to me ends right here. Your pullback would be this zone here. We can just double check that and make sure it's in that range. So that's 14.6 pips. I'm more than happy to classify that as structure. Once again, we take this low. The bearish trend continues. And like I said before too, you will find 15 minute a little bit over the top sometimes. And it's unfortunate, but it happens that way. So that's a 19 pip pullback. I don't love it as structure, but it is structure. And you'll find that you get this a lot with 15 minute. you also find the 15 will be the best time frame to get you into trades, as you can find POIs on the 15 and ultimately move into your execution time frame. So our push ends right here. I don't think that's enough of a pullback. We can double check if that's structure or not. 12 pips. It's not like great structure, but we'll class it as structure. It meets the criteria. Once again, you have, so the push ends right here. Now this will be your pullback here, and then we'll say it is one clean push right to the bottom. And ultimately, you don't have any more lows. We do wick below it here, which is more of a liquidity grab. It fails to create any new structure. And here, we take the high point and become bullish again. So if you wanted to move this point over to here, you totally can. Again, this is not the greatest pullback, but I'm guessing it's just over 10 pips. Yeah, we'll class that as structure. So we are confirmed bullish on the 15, and ultimately what's happening here though is 4 hour took this low here when this 4 hour low here was created. So now looking at it from a higher time frame perspective, you would be likely looking at running this low. Now obviously the trend's not confirmed yet, so it can reverse here, but you can also formulate a trade idea to run this low. Pull back here, new structure here, and ultimately we don't have any more structure to the upside, but we do have bearish structure here. Our first bit of a pullback is kind of right here. I'm guessing that's roughly 13-14 pips. That should be no issues to map that as structure. We have another low here. This is also your 4 hour low here that we just created. So something to keep in mind every time a 4 hour low is run, we don't know when, but we can anticipate a pullback because all of this liquidity was absorbed. And we never know how large the pullback or exactly when. Sometimes the pullback may not happen till down here, or it happens right away up here. So it's always good to pay ourselves as soon as this low goes and take the majority of your money off there. And if you want to leave a little runner on, you totally can. But it's just always ensuring yourself you're getting paid. Now here we do become temporarily bullish. I don't love it, but it is what it is. And the bullish structure actually doesn't fail till over here because that's our low. So you are back to being bearish, and I believe this made a new 4 hour low. So as we said before, as soon as a 4 hour low is run, anticipate some sort of pullback. We don't know when. At this point, you wouldn't be looking at running this point, but you would maybe anticipate a pullback to maybe this supply zone, and you would play this safe until this high goes, and now you can start building a narrative to continue on up. So we're always ultimately just trying to align the 15-minute with the 4 hour. So if the 15-minute and the 4 hour are not aligned, your trades are always going to be shorter, but you're guaranteeing yourself that you're going to pay yourself. So ultimately our high here on the 15 is the 4-hour high, which I would say doesn't end till over here. And our first bit of pullback would be in here. We have another pullback here when this high goes. Now again, this may seem very repetitive. I assure you it's very necessary. Some people are going to get this really quick. Other people are going to want to practice this a little more. So we're going to try to explain it as well as we can, just so people have something to go off of. So you have another high point. Now again, if you look down here, again, no body comes below this low. It's just a wick. So we're not too worried about that. And ultimately we have a new high here. To me, this would be the high point. Could even call it this. This would be your low. Once again, once this high is taken, and these are obviously news candles. EU doesn't generally move this much at once unless it's news driven, which is one of the reasons why I like this pair for anybody that's a beginner. And I still trade it myself. It's probably the easiest pair to trade in my opinion. Great for building confidence. So once again here we take this high, the impulse completes, and we continue on with the bullish push. And what we'll do here, we're just going to zoom out for a second and show everybody what we've mapped so far. So we started back here in April, and you can see this push up continues. Then we turn bearish here to have this daily pullback, and ultimately we end up realigning with the higher time frame to continue on up. So we'll zoom in here again, and ultimately we have a low, we have another high. Now these are pretty minuscule pullbacks up here. If we did want to class these as structure, we can. Myself, I'm just going to say this is one complete push just because I don't want to map 3 structure points in that little stretch. And you may find that you do. I try to keep structure mediocrely stable, meaning I don't want too many structure points, but I also don't want not enough. And that's where the 10-15 pip rule on the 15-minute can be quite flexible, and you can kind of use it to help you out in any way you see. Alright, so once again we turn bearish here. We have a high. We have another low. And we do have a bit of a pullback here. Don't love this pullback. Let's see. So 15, yeah, 14.7. So unfortunately that is structure. And here we fail to create a new low. However, we end up making a new high just to create a new low. That will happen at times. There's really nothing you can do about it. I wouldn't get too focused on that. It's not going to happen all the time, but on the 15-minute, this kind of stuff does happen. And this is where the higher time frame will again help you out. And if you're not sure, just remember, you don't need to be in a trade. If you don't want to be in a trade, don't be in a trade. So let's see. This is probably enough of a pullback here. And And we again have new structure created here. So the 15 can be quite monotonous, as you can see. And here we take the low. So we can actually call this our high point, and this is our low point. Now it may seem confusing right now, but I promise with a little bit of practice it's not that bad. So here we are starting a bearish retracement again. So anytime the 15 minutes starts failing to make new highs and ultimately supply is holding at the top, we can start assuming that the 4-hour retracement starts. And once this low goes, we can assume that we'll get at least one more pullback and at least one more push on the 15. It doesn't always work out that way, but generally there's at least 2 pushes. And depending which pair you trade and what your back testing's like, you'll figure out what works for you. So here we don't really have any real pullback till pretty much the impulse ends. Let's see, let's double check that. I don't think that's enough, no. So our pullback would be pretty much at this point here. And ultimately the bearish order flow continues. Now it's very important to use 15 market structure because you can get quite confused if you go lower. I remember this trade here, and on the 5-minute we actually received a body close above here, and I found a 1-minute flip here, and I actually took a long here. And back then I was still using 5-minute and 15-minute, and that's when I kind of started figuring out that 15-minute gets you on the right side of things a lot more often. So here we wick above the 15-minute, but there's no body close, which told us to keep on shorting. Whereas if you find this area on the 5-minute, there is a body close above this, and right away you're just like, oh, well, the body closed above it, we better start to looking at taking loans. So it can get very confusing. 15 keeps us on the right side of things more often than not. So ultimately our structure would be down here. Again, a little bit of a weird structure here. I don't love it, but that's just the way it worked out. So our push completes here. Now ultimately we have a pullback up here, and you don't really have any structure till this low goes. Now here we have another low point. This is also a 4-hour and a daily low, as you can see with our blue and black lines, and you don't have any structure till this high goes. It's very important not to get lost. A lot of people get really lost in this stuff, and this stuff is all classified as substructure, or you can classify it as internal structure, meaning it is internally contained within the 2 structure points. Yes, this broke a supply. You could call this a change of character and willingness to go up. Price came back down, failed to breach this demand. You can maybe now start formulating an idea that this high becomes weak because it failed to run this low, and maybe the higher time frame trend realigns, and you can start looking for loans. And ultimately we start developing all that by seeing the disrespect of this supply. This is the supply which gave us the last drive down, which gave us new structure. This push up broke through this supply. Now I'm starting to think the bullish momentum is going to come back to the market. And the 15 is going to see this long before the 4-hour will. And the daily, again, we don't really use for much else other than knowing when the 4-hour structure is going to end. So now we've realigned with the higher time frame trend once again. So now we can continue to keep on running highs. And as of right now, your long-term target would be the highs here. So for management's sake, I'm always looking to run this high. If I'm taking a trade from here or from here, I'm looking to run this high, and you're always looking to run the highs because our expectation is for price to continue ongoing. Our expectation is for demand to stay in control, but we also have to be smart. We pay ourselves every time a 15-minute high goes, and this keeps you getting paid no matter what. And if you want to leave a little runner on, this would be your long-term target, as we expect the 4-hour high to go as well. But it's a very good habit to get into, to pay yourself every time a 15-minute high goes, because nothing in the market is guaranteed, and it's good to have rules in place for paying yourself, because that's why we're all here. So we do have a bit of a pullback here. At the same time here, we also become bearish. So this is kind of our high point. We turn bearish momentarily here. And at times this will happen. And that's totally fine. Usually it'll realign itself pretty quick. So you can see we turn confirmed bearish on the 15. However, the last supply that gave us this drive here was quickly violated, and you could start formulating the idea that something in this doji caused it, and we can continue on up. So here we realign with bullish market structure. So yeah, you will find out with 15, sometimes it's too much structure, sometimes it's not enough. You will get used to it. It's not as bad as it looks. So here we take this high again. I don't think this is enough of a pullback, but it might be. No, it's not. So we have this high. This is our pullback, and ultimately we don't have any more structure till here. So again, very important that you don't start classing all of these points as structure. You're going to look at some people's charts, and every time it comes down and goes up and down and back down, and they map all these as structure points. They're not structure, they are substructure or internal structure contained internally within this high point and this low point, meaning that yes, we can build trade ideas off it, but until this low goes or this high goes, there is no new structure created, only confirmed by a candle body, not a wick. So once again, we have a big impulse up here, and I think this is enough of a pullback to class as structure. 15 pips definitely is. Here we create new bullish structure. It's always important to pay attention what's happening on the 15-minute, because if the 15-minute starts doing something weird, there's usually a reason. Sometimes it's just a liquidity grab, other times it is a signal for a higher time frame order flow shift, whether that's to realign with the daily or to perform its pullback. So here we turn bearish, and here we once again turn bullish. Now, if we just zoom out for a sec, I believe this might be, no, not the peak yet. So as you can see, we've mapped quite a bit of structure. Now what I'm going to do at the end of this video is I'm going to join all these dots with a green line. I'm not going to make everybody sit through it, and we're going to discuss it in the next video of how you can use it to form trade ideas, and then you can kind of see how it all works together. And I kind of wish more people taught structure this way so people can see how it works on the multi-time frame side of things. So this is enough of a pullback to be classed as structure. Again, I don't love this as structure, but it is structure. So now we don't have any structure till this high goes, and this high goes over here. So again, we don't have any real pullback till probably, I would probably say maybe here. It's borderline. We can class it as structure. Again, not my favorite structure point, but it's something. So as this high goes, we have another structure point. And we have a pullback. And here we've once again created a new bullish structure. To me, there's really no real pullback till somewhere up here, and the pullback ultimately takes this low and creates bear structure. So now we have bearish momentum. We have a bit of a pullback here. So if we zoom in here, this wick did actually get taken. So this is actually new structure. We did get enough of a pullback here. And this is one of those prime examples of sometimes you get too much structure. And there will be times where 15 structure is really far apart and you don't have any structure for days. At times like that, you just look to see if demands are holding or supplies are holding, and it helps you out to know which way to go. So that's our first bit of structure. We have a pullback here. Now, I'm just going to call this impulse our end of impulse, and this our pullback here. This is right around that 10-15 pip range. If you didn't want to call it structure, you don't have to. If you do, you can. I don't really think we need to. There's really no reason to have any extra structure in that area. Now, speaking of this, again, not enough of a pullback, so we can basically call structure the end of this impulse. And you do have enough of a pullback here. It's probably roughly 15-20 pips. Here we turn bearish. And now the order flow turns bearish on us. So we'll just pause here for a sec. We'll zoom out and have a look at it all. So this is, I believe, where order flow starts shifting on us, and the second this low goes on the 4 hour, we see it first, you could start building a narrative of shorts are coming. So this will make a little more sense once we join it all. Again, we have the highest point to the lowest point, our pullback. Here the impulse really doesn't have any pullback till here. Once again, we make a new low, and here we turn bullish. And once you grasp this concept, the rest of it will come together quite a bit easier. So here we turn around and turn bearish once again. So if we just zoom in here, we do get bearish structure here. We have a bit of a pullback. We have a bunch of inducement in here, liquidity. Ultimately, you have more inducement here. You have a POI that needs to get mitigated, and you can target this low. What you can note here is nothing is able to break past this supply. Instead, we make a new low by taking this. So even though this is retracing up, we can start assuming this is liquidity and that the bearish order flow is going to continue. Now we smash this 4-hour low. Ultimately, we become bullish here. Our pullback is, let's see, not quite enough, so I'm going to say this is our pullback here. Here we're still making new bearish structure. Now this did just break it, but what you can start insinuating here is, once again, you have a demand zone that just is holding. You also have a supply zone that is holding. These zones can be complicated, and this is where understanding higher time frame and understanding that you just took this low, we expect some sort of a pullback. And you can start building a narrative that at least 50% of this impulse somewhere in this region should be met at a bare minimum in a retracement phase. It's not 100%, and it doesn't always work out, but for the most part it'll keep you on the right side of things. Again, we have a impulse, don't really have any real pullback. This isn't enough to be classified as structure. This, I think this would be your first bit of pullback here. Now we do turn unconfirmed bearish here for a bit, and that's totally fine. Now we'll discuss this in more detail when we get into ranges. But notice liquidity stacked up, liquidity stacked down. We wipe the highs, we wipe the lows, wipe the highs, wipe the lows, wipe the highs, wipe the lows, wipe the highs one last time, and then the real move begins. This will be explained in a later section in this course, but this is a very common scenario for a range. And then generally a range gets swiped multiple times before they leave it. And ultimately here we become bullish again. This is where you have to be really careful. Areas like this can wipe you. And ultimately you use your 4-hour market structure to help you with this. And just remember, if you're not sure what to do and you can't figure it out, you don't need to trade. Everyone tries to force trades. I promise you, if you don't try to force a trade, you will miss out on trades, yes, but you'll always miss out on more losing trades than winning trades. Because if you're not sure, you're more or less gambling, and that's not what we want to do. So we create a new structure here. Now we are realigning with the 4-hour time frame. At this point, you can start building a narrative now that the 4-hour pullback is complete and that this low failed to take this high, so this becomes the long-term target. Obviously you pay yourself out every 15, but this is the long-term target. As soon as this low is taken, we can anticipate a pullback. And this will all be taught in expectation order flow, what we can expect the market to do and why. Again, you have a low, you have a high. Ultimately, you don't have any structure here until this low goes. And this is one of those areas where you really don't have any 15 structure till the end of the impulse. Depending how big this is here, let's see, it's borderline. It's definitely borderline. Maybe we'll class that as structure. And ultimately you had a pullback here and continuation to the downside here. So you actually become bullish once this high goes. And I don't love structure points like this, but they have to be considered as something. So that's our pullback, new structure. Yeah, that's right. So our next high would be up here. And could say this pullback here becomes our structure. You know, and this is one of those areas where structure can get quite messy. In areas like this, I choose not to map any extra market structure if it's just moving sideways like this, as you don't really need it. Again, we have an impulse up, we have a pullback, and you have another impulse up. And sometimes price action does do this where it's not pretty, and you do see stuff like this. Ultimately, you don't really need to be any part of that. Like, there's really not enough pips in there for me to even want to get involved. You can, but it's also one of those days where you can be like, I choose not to trade. For the most part, for probably 4 days a week, there's good trading. 1 day a week, you're going to find that you're forcing trades. I recommend everybody start off with one pair. If you're finding you're doing really good with one pair, maybe watch two. And once you have two pairs, you can generally find a trade every day of the week on one of the two pairs. And if you can't find a trade on either pair that day, that's totally fine too. Again, you don't need to trade every day. You just want to take high probability setups. So this is one of those really not awesome areas that you sometimes get, and this is obviously news driven. This is not typical EU behavior, but once again you can see it's one of those ranges. Liquidity's wiped up, down, up, down, up, and you stack more liquidity here, stack liquidity here, you wipe it all, you wipe all of this, and then the real move begins. This is a very common scenario. You'll notice it happen over and over and over again. It is a couple sections up ahead here where we talk about ranges and why they happen and what they are. So here what we have is bearish structure realigning with the higher time frame. And once again, let's just measure this. It's actually structure there, so we can classify that as structure. Perfect, we got another impulse down. We can measure this one. This is one of those things you may or may not want to class as structure. Completely up to you. I'll class it as structure, I think, just because 14 pips is pretty decent structure. And ultimately we have our last push here when this low goes. And what this allows you to do too is get on the right side of the market more often and quicker. So here again, not the prettiest price action, but it gives you short-term buys. Again, you know this is counter 4-hour trend, so you're not expecting to shoot for the moon here. You just have to be smart and understand that the pullback's not going to last long. And ultimately, this would be your structure points here. Minute structure. Have another structure point here. And your low gets violated here. Now you start formulating the idea that the bearish or the bullish push is likely over and that you're going to start looking for sells. Once again, you can see a bunch of stacked liquidity up here. We grab it. Demand gets disrespected here. Demand gets disrespected. Demand gets disrespected. Ultimately, supplies start holding, and we can start formulating the idea that that's coming. We obviously don't typically expect candles that size unless they're news driven. So we don't really have much for structure here till all the way down here, I don't think. Bit of a pullback here, more market structure. Have another pullback here. So this is, once again, structure. I don't love it, but we do have to classify that as structure. The next bit of structure is all the way down here. once again you have a pullback. And this is your 4-hour low. Let's just zoom out and see how much we've mapped. I think we've mapped more than enough that we can have something to talk about and talk about how this all correlates together. So what I'm going to do is join all this market structure together with a green line, and I will meet everybody in the next video and we can talk a little more about how these time frames correlate together. I'll see you guys there.